Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. Well, the markets are buoyant. You can see 24,358 onto the Nifty. There are several sectors that are supporting the move. The banks, financial services, they are in limelight today. But more importantly, the primary action continues to be on focus. You can clearly see the debut stock, Gaja Capital, is in focus with a strong listing gain that we have seen on the company. About 16 to 17% higher is what Gaja Capital, or the alternative asset management company, has got listed at. I have Pawan Nahar with me, our colleague, to get us more details on the same. Pawan, what was expected as far as the listing is concerned? Has it matched to the expectations? And of course, for the kind of subscriptions that we were seeing, how do you see the listing gain?
So Sakshi, the listing has been somewhere around 15-16% above the issue price of 160. We can see that the stock was listed at 185 on both BSE and NSE, a little more up and down, but the stock saw some initial buying interest and then the profit booking. So more or less it has been range bound somewhere in the range of 180 to 190 rupees. The issue was overall subscribed more than 31 times. So it managed to get a great interest from the investors, and it has delivered the listing gains as well for the investors.
Absolutely. Any brokerage houses updates that you have, Pawan, that have pointed out to what should one do post the listing gain of around 25 rupees per share that they've managed to get after the 16% listing gain?
Yes, Sakshi. So, if you consider the business model of Gaja Alternate Asset Managers, it's an AIF driven business. So, it's basically a long-term business. So, brokerage firms were suggesting to subscribe it only for the long-term basis, and those investors who have a short-term risk appetite may also book the profit, considering a decent listing gains and the current IPO seasons, if they want some capital and if they want profit off the table. So that's what the brokerage firms are suggesting.
All right, Pawan. We'll also get our a market expert on board now. We have Mr. Sudip Bandyopadhyay joining in as a market guest for the day. Welcome to you. Good morning, Sudip sir. Good to have you with us. Right at the start, we're looking at Gaja Capital. What was your own sense of this company? What was your suggestion to the clients? And post the listing gain, are you also of the view that the listing gain should be taken off the table, or do you think this company marks for a long-term, portfolio inclusion?
Good morning, Sakshi. Thank you for inviting me. I think we discussed this and many other issues last week when we met. And my view on Gaja Capital remains same. It's an excellent opportunity for retail investors to participate in an AIF. Normally retail doesn't get a chance to participate. This is an excellent opportunity. But of course, it's a long-term. Funds, AIFs are by nature long-term. So if you are in for long-term, of course, it's a good vehicle for you to test this particular niche, because this is the first AIF which has got listed. So from an investor point of view, it's an interesting thing to participate in. But if you are a short-term investor, my suggestion will be book profit at some point of time. I don't know whether you should be booking today or tomorrow or day after, but I think you should take your profit, because AIFs are not for short-term investors. Definitely not. So that's my view, and I will remain firm on that.
Okay, so that's the overall view on Gaja Capital, Gaja Alternative Asset Management. Of course, the company has got about a 16 to 17% on the kind of listing gain there is, and you've heard from Sudip sir what exactly should your strategy be there. But let's come to the secondary markets and take your view also there. We're starting off another series on a positive note yet again. We are inching closer to 24,400. That has so far remained as a key resistance level for the market investors. Every time we try to hit that level, we do see some amount of profit taking that comes in again, and the markets have largely been in a range bound fashion from 23,800 to 24,400, this range for some months now. What is your expectation? Do you think the cool off in the crude oil prices that we are seeing, slightly positive approach of the foreign investors, will now be able to break that range and be able to take us to the next leg, sir?
Well, Sakshi, it all depends on where the oil prices move. Today's move is very clearly linked to the oil prices coming down, and there is some talk of some truce, at least temporary, some talk of some structure to evolve between Iran and Oman to allow passage of ships through Strait of Hormuz. There's a lot of speculation, a lot of talk, a lot of news flow, but what's actually happening on ground is there is very little movement. let's hope that there is some kind of stability returns to the Strait of Hormuz in West Asia. If that happens, yes, of course, because you're absolutely right. Corporate results have been good in Q1. FIIs are also looking at India, and they've started biting as opposed to continuously selling. They've started taking small exposure and definitely looking at India for increasing exposure. But it all be contingent upon where the oil prices go. If the oil prices stabilizes or keeps going down, I think that's fantastic news for Indian economy as well as Indian capital markets. On the other hand, if oil prices continue to flare up intermittently, I think the markets will again start correcting because we are to a great extent dependent on oil, whether it's our economy, whether it's our companies, whether it's our currency. I think we have to keep that in mind.
Absolutely, but now that the oil prices are cooling off and are hovering around $86 a barrel, are you comfortable in looking at the oil-linked sectors? Are you looking at oil and gas? Are you looking at aviation stocks? We've seen some last couple of sessions, Indigo pulling up in trade. We're also looking at the paint stocks recovering. Are you looking at these spaces, or are you still, not very confident of betting big, on these spaces?
Well, I will err on the side of caution. We have seen this getting played out many, many times over the last 6 months. There is some talk of cruise oil prices comes down, and again, something happens, and tensions flare up, oil prices move up. So yes, I'm hoping that things settle down quickly, but I'll err on the side of caution. So I don't think I will take large exposure or advise large exposure in crude-sensitive stocks. Of course, paint companies are a different breed altogether. There are multiple other factors apart from crude, and we hold positive view. Last quarter, paint company numbers were very positive, much better than what the analysts expected. And there is always the impact of crude prices going up or down gets reflected in paint companies and results with a lag of about a quarter. So immediate reaction would, of course, market will react. But we know fundamentally, I think there is a time lag between the prices going down or up and the paint company P&L reflecting it.
Okay. I'll stick with the aviation space for some more time and try to draw your, attention to it. We've, of course, got a brokerage house update today on GMR Airports, where they've given a buy rating and a target price of 135, and how they're talking about the GMR Hyderabad Airports tariff order is something that they are looking at with a positive view. They're also looking at how the Hyderabad airport is expanding the capacity to 60 million packs. Related tariff upside is also shifting to FY 30 to 31, and this will be linked to the execution timelines. The recovery mechanism remains intact, and only recovery timings are going to change for some time, because from FY 25-26 to about FY 30-31 is the kind of deferring of the expansion capacity is targeted at. One is that we are also listening to so much of news flow with the government now focusing on ensuring that there is no oligopoly as far as the aviation, the airport space is concerned in the country. They do not want some companies which are large conglomerates only to control the airports, because looking at the kind of bidding that we are going to be seeing from expansion of airports in the country, they want more and more players to enter. So at this point in time, we only have the Adani Group and GMR Airport Group as the two major players who are holding the maximum market share there. How do you see the opening up of the market there too, sir?
Well, I think the statements and the intention of the government not to allow oligopoly is definitely a step in the right direction. We should have competition, but coming back to the markets, which is of our concern, I would say that the only listed airport stock which you can participate and play in is GMR. We have been positive on this because we believe it's a long-term infrastructure play. Also, consumption theme plays in very well, with airport shopping becoming more and more popular, and a significant part of the airport operators' revenue coming from shopping at the airports and other facilities at the airport. So we have been very positive, and we believe that from a long-term investor's point of view, having GMR Airport in the portfolio makes sense. At some point of time, I'm sure Adani also will get into some kind of listing as far as their airport business is concerned, and we'll be very keen to watch that space, as it evolves.
Okay, so that's the aviation airport space that we've discussed. Another space that's in focus today is the QSR space, the FMCG space as well, that I wanted to discuss with you. Brokerage houses are focusing their attention on the quick service restaurants. We have Macquarie, which has upgraded Jubilant Food from neutral to neutral from underperform. They've hiked the target price to 520 from 375 rupees earlier. We've also seen the stock react today. On the pizza focus space, Devyani International, Sapphire Foods, both they have an outperform rating. Devyani, they've raised the target price to 190, and Sapphire, they've raised the target price to 300. Even for McDonald's operator Westlife, they're maintaining an outperform and hike the target price to 730. They're talking about there is a constructive outlook, especially when it comes to the triple SG growth. They're expecting it to be ahead of Q1 as far as Q2 and Q3 are concerned. They're also seeing demand recovery over the last 2 quarters. They're also seeing EPS volatility, however, from Domino's turnkey operations at this point in time. And even they're talking about some dine-in led demand recovery that could come in the second half of the fiscal year as well. Let's talk about the entire QSR space. How are you looking at it, Sudip sir? What are your favorite stocks from this basket? And, what are the concerns vis-a-vis the positives that you're looking at here, sir?
Well, I think, Sakshi, you have to remember that we are heading into a festive season. And obviously, consumption of QSR restaurant food increases significantly during the festive season. So, absolutely no doubt about the fact that Q2 and Q3 should be better compared to Q1, and they are bang on target that things should improve for the entire QSR space. So, I completely agree with the report. But having said that, I will point out a few things which are a bit cautionary. Look, the valuations are not cheap. That's one thing investor has to remember. And if you know that, and if you keep that in mind, your action should be guided by that, and you should not unnecessarily expect massive hike, moving up in prices of QSR stocks because there is a festive season. Yes, there will be excitement around the counters, but don't expect too much of upside. That's what our view is. We like QSR space, but the valuation is not so attractive that we will start recommending it.
Okay, but from the entire space linked to it as well, I'm going to be talking about Varun Beverages also. The stock has reacted, of course, today to brokerage houses penciling in higher targets. CLSA has a high conviction outperform on the stock with a target price of 629. The company has now formally entered into the Indian alcoholic beverage space through incorporation of a dedicated subsidiary that's focused on ready-to-drink, RTD they call it, beverages. These are alcoholic beverages and allied categories. This move marks a strategic diversification that's beyond its beverage portfolio. So far it was seen as only PepsiCo's bottler plant, but now even the alcohol portion will also be considered going forward from here. This significantly also expands its addressable market there. What kind of an opportunity do you foresee, sir, for Varun Beverages? It's been in the past a big wealth creator for investors. It's been lying low for some time, but it's actually coming back with a big diversification now into the alcoholic space too. How would you look at it, sir?
Well, Sakshi, we do appreciate this diversification. Look, till now, and I would be very candid with you, Varun Beverage was a distributor, a bottler and distributor. They didn't own any brands which can create value for the shareholders. So we have been a little skeptical about Varun Beverage's core business, which is working as a bottler. So now I think they are getting into creating of brands on their own, which is where the long-term value creation happens for the shareholders. So this is definitely a good step and a step in the right direction by Varun Beverages. This was, I would say, long overdue, and this should take them to a different level and also justify existing valuations, if I may say so, because as a bottler, as a distributor, you can't command the kind of valuation Varun Beverages was commanding. But of course, they had the opportunity of creating a brand. because they have the muscle as far as distribution and packing, bottling is concerned, and they're doing exactly the same thing. So we like it, and from a long-term investment point of view, one can definitely look at Varun Beverages, but it'll take some time before this gets reflected in the price.
All right, so that's the entire consumption space that we've looked at, viewers, with regards to the big news flows that are coming in there. The other key area that I wanted to discuss is the financials with you, sir. We are seeing today the PSU banks, private banks, financial services sector buzzing. In fact, for the last couple of sessions, we've seen this entire pocket in flavor come back again. Today, of course, there is also an entire focus on the credit card spends as well, on which we have seen brokerage houses come out with the reports. We have Jeffrey's report that talks about how for July 2026, we've seen the industry credit card demands, the spending growth moderate to 7.1% on a year-on-year basis, while the card volume growth has improved to 9% odd. For SBI cards, they have seen the spending grow 22% year-on-year, and the spending share, however, has fallen 140 basis points on a month-on-month basis. They talk about how its cards volume growth was steady at 7% with stable share there, but the net additions are 0.18 million. That was up 2.7x on a year-on-year basis. Among the other key players, they're talking about how the spending share of HDFC Bank has fallen month-on-month, while it was steady for ICICI and Kotak as well. And they've retained a hold on the SBI card space. Again, for Morgan Stanley on the credit cards data, they are continuously talking about how the spends growth is decelerating, and that's something that they are watching out for. How would you look at this fresh data, and what would you do with the investments in these credit card majors, SBI cards, ICICI, Kotak, which have so far been leading the rally? And is there any serious concern here, or is this just an aberration that you see, sir?
Well, I definitely don't have any concern. I think, again, Sakshi, we are stepping into a festive season, and the spending for Indian consumers go up significantly during the period, let's say from September till December. This is the festive season for us, and credit card spendings will definitely increase. So I won't be perturbed with this data, but I will look at opportunities. Even I think the recommendation is not to sell or exit. The recommendation is to hold. I would concur with that. There is nothing to get too excited about the credit card business at this stage, but this is not the time to worry also, because we are heading into a festive season. That's what I would say. As far as overall banking sector is concerned, we have been positive for quite some time, and we continue to maintain our positive view on ICICI Bank. They have performed and outperformed pretty much all the estimates over the last 8-10 quarters. And the way the business is going, I think they will continue to do so. We do like SBI from a valuation point of view as well as performance point of view. I think the Q1 numbers were pretty good, and we continue to expect good and better numbers from these banks in the coming quarters as well. Also remember this FCNR deposit mobilization,
Yes.
Which is continuing, will give them a significant leg up as far as fresh fuel for lending and increasing the loan book, as well as bring down their cost of capital, which in turn will reflect in their margins going up. So I think from the overall banking sector, things should start looking good. There is no major stress in the economy, and the asset quality should also continue to remain stable. So under the circumstances, banks should do well.
Okay, fair point. Let me now towards the end also ask you, sir, the pockets that you are looking at in terms of key opportunities that are emerging. Which are those pockets that have now freshly added some momentum? Are you looking at any agri-related names? We are looking at sugar, for instance, that's on the buzz, off late. What exactly is on your radar? I wanted to ask you, sir.
Well, it's actually sugar, definitely not. It's an extremely volatile case. And the government will do whatever it needs to do to ensure the sugar prices remain stable and doesn't shoot up. We saw the sugar prices going up, and then immediately government, I think the next day itself, they allowed duty-free imports to kind of stabilize the price. They will do more of that if sugar prices start to shoot up again. Of course, the reason for sugar prices shooting up is the fall in the inventory levels. It's roughly half the amount normally we expect at this point in time before the festive season, and that's a matter of concern, and that's why the prices shot up and government allowed duty-free imports, so things should stabilize. So I don't think we should get too excited about the sugar price, company prices. Also remember, we are heading into an election season in the most critical state in India, which is UP, and that's the largest state for sugar as well. The government cannot afford to get it wrong as far as sugar prices are concerned. There are multiple constituents. There are farmers on one side, there are sugar mills on one side, and of course the consumers on the the other end. So it has to be structured rightly, and they will do it. So don't expect too much from the sugar companies at this stage. That's point number one. Point number two, very quickly, as far as sectors, I continue to maintain my positive view on the pharma healthcare space, and I would continue to recommend good quality stocks in pharma, whether it's a Sun Pharma, whether it's on the international side based on their international business, branded patented business, whether it's the CDMO players like Divi's Lab, or whether it's a domestic focused pharma company like a Mankind Pharma. These I will continue to favor at this stage. I also like the chemical, specialty chemical and agriculture. I think there is a turnaround visible. Once the West Asia war situation stabilizes, the logistics cost and the cost of materials also will come down, and we will see a secular growth in this sector. So, investors who are a bit aggressive, I think, should start taking position in this space, whether it's an UPL, whether it's any other good RT industries, a good specialty chemical or chemical company. One should start taking positions.
Okay. Let me also just quickly, before winding up, ask you, sir, on the Hind Copper OFS, what are you advising the investors since the OFS opens for retail investors? Are you seeing a good opportunity for investors right here after the initial massive response that the OFS has received? The government is likely to exercise the green shoe option, so in all it could be a 6% stake sale that could come in. We're also seeing the copper prices inching to record high levels yet again. There's been a move over the last 1 year on the copper prices too. What does it mean for the retail investors as an opportunity, sir?
Well, it's a great opportunity, and that's exactly what we have advised retail investors. And they get an opportunity to subscribe to this issue, and they should do that. They're getting a good deal as far as price is concerned. And also remember that, as you rightly say, the copper prices have shot up. And beyond the short-term price movements, I would say there is a structural bull run as far as copper is concerned. Every gadget which is coming or going to come or being used now requires more and more copper, and that's becoming very, very critical in this AI, EV, and green energy kind of an environment where copper will be very critical in most of the gadgets. So under these circumstances, demand for copper will be strong. The company has been doing well, and you are acquiring the company at a discounted value. That's exactly what you are doing if you are subscribing now.
All right. Okay, Sudip, so thank you so much for being with us on this program. It's always a pleasure to hear you and your insights for all our viewers. So thanks a lot for those. And we'll, of course, get in touch with you very soon on another edition of Business Today Television. Thank you so much. Hope you have a fantastic time till then. All right, viewers, we'll wrap it up on that note as far as what's hot is concerned. But if personal finance is on your mind, then stay tuned, as up next will be our special broadcast on Money Today. Since a lot of you have now taken up freelance jobs, have also become content creators as large, but have you already started to think of what kind of taxation aspect you should remember from the various sources of income that have come in as you have changed your profession, or are doing this additionally apart from your own core source of income as well? Well, if that is on your mind and you are still confused about all of this, then stay tuned, as up next we will be decoding for you everything that you need to know for tax planning for freelancers and content creators, coming up next.
Hello and a warm welcome